Sure. Okay. She wants to know if you know where you go then.
Promotes.
Usually it's the phone. Yes, phone.
All we can see is just.
No idea, the cost of the members of people involved, because if we're gonna do a Zoom.
I don't know what this thing is.
Seriously.
Really, the way it minimizes. Alright, now review. There's a little.
Maybe.
Waiting to make sure the view changed the way it should have. Huh. Remember. Okay, okay, then gallery view to work properly here.
So I can see.
Mayor. We get coffee.
Joe, Kelly, Suzanne, Penny, and Ernest.
Okay, if you don't mind just keeping it up for a minute to make sure that it is
Sure.
still going.
No, I don't think Kevin's coming.
Oh, David brings us.
Yeah, I just realized he had a conflict.
Who's ready?
You think we're finally ready? It says we're live.
Let us begin by acknowledging that we are gathered today in Mi'kmaq, the ancestral, present, and future territory of the Mi'kmaq people. Today, we gather with the intent followed by the Living Peace and Friendship Treaty, with respect, cooperation, and coexistence. We are all treaty people. I call this meeting of Town Council for June 10th, 2026 to order. Before we do any business, I just want to express our thoughts and best outcomes to the town of Bridgewater and disaster fire that is still going on. I think there were 15 departments with our mutual aid there since the two buildings that are pretty well gone, and there's a third one that they are trying to prevent from catching fire, and a couple of vehicles have been destroyed as well. There's one person not accounted for, so our thoughts are with the town of Bridgewater. And so and we're very grateful for all the mutual assistance, the other departments and support that they provide. So, being that, we'll move on to our audit. We are so pleased that we are doing this. And I want to welcome Auditor Lauren Vale. She is from BDO, and she will be leading us through this process. And you can probably let us know, how would you like us to wait for questions, or would you like people to indicate they have a question? And
I'm happy for more people to indicate if they have a question and stop, and it's easiest if you explain at the moment instead of wait till the end. Sometimes you forget the question you wanted to ask.
Okay.
So yeah, just raise your hand, and if you have a question, go ahead.
And I'll acknowledge them to ask the question.
Perfect.
So two things. One is a formality, just to approve the agenda.
Yes, I'm
gonna do that.
Yes.
But I missed the auditor's name.
Oh, Lauren Vale.
Laura or
Lauren.
Lauren? Okay, thank you.
Okay, so I will go to the first item, approval of the agenda. Councillor Feeney, second by Councillor Wilson. Thank you. All those in favor, signify aye. Nay, the motion is carried. Thank you. So, Lauren, you're on.
Okay, wonderful. Well, thank you, Mayor. And it is very exciting to be here this evening, because we are getting ever closer to getting caught up with the town's financial statement requirements. And so here tonight to present the 2025 results, and then hopefully we're gonna, with Wendy's blessing and hard work, kick off 2026 right away. So yeah, very excited to be here tonight. So I have the financial statements, you have the financial statements in front of you, but I did also have just a little presentation of audit findings. I'm not sure if we can get that on the screen or
Yeah,
how we want to
yeah, I can do that. Sorry, I didn't ask if you needed anything with the screen whether we had all the printouts. So,
I should have asked
So those
before
things
we
are-
set up.
Is it jump drive or is it?
I think what I'll do is I'll send you the link to join this in progress. That's probably the easiest thing to do. We say probably, and then we'll actually try it and see if it works.
That's why I caveated it, probably. If not, I think you and Wendy both have copies, so we might be able to share as well.
Okay, so presumably, Lauren, this invitation will work and also will allow you to actually share your screen as you get it. So this is coming now. Yeah, hopefully that will show up as a link on your end. This is a way I can send it directly from Zoom also, which is what Kelly would have done, I'm sure.
Okay, got your second first.
And then if that does work for you to join, then we'll just want these. And we got one for our gallery here too, so maybe I'll do one this way. Daryl, can you see the one all right if you're there? Okay, this way. The one way. And back to it. That wouldn't work good for me. All right, you're going to mute yourself, but it's your mic on the speakers.
There we go.
All right, so if you try the screen share, it will tell you if I need to enable your screen sharing.
Yes, I think I'll have to enable. I don't actually have the icon to screen share.
We're just gonna have to upgrade you. Promote to panelist.
Wonderful.
Yeah, you've been promoted. And then I think as a panelist, you'll just be able to screen share, but if you need further promotions.
Oh, it says host has disabled.
Oh, yeah, still gonna do that too, all right. We could do. Well, I can make you the host, that's a real promotion. Demote you back to attendee. I think it'd be just straight up, I'll give you permission. Well, I'm gonna make you the host.
Okay,
I don't think it'll cause any problems.
that should
Maybe
be.
file for income tax.
So now you should be able to screen share, I presume.
Yeah.
I guess that also means the YouTube should be showing us, so that's good. And now if you want, you can share the rest of the document this here too, which may be helpful.
Okay, great, it worked, wonderful, okay. So, dedicated video team, so, as Mayor said, my name is Lauren Vale. I'm a partner with BDO and have, been doing this audit and, accounting, gig for 15 years now. I've been an engagement partner for 2 years with the firm, and so I signed off on the 2024 engagement and now 2025 engagement. I had the pleasure of taking over from Erica McCurdy when I became promoted for the audit, because I have been working in the municipal space and the public sector space for the entirety of my career. So really, kind of at the firm, we try to industry standardize everybody and sort of stick within, instead of what dabbling we call it, sort of have people specialized in particular industries. So while I do live in Prince Edward Island, work with the Halifax office here locally, and I'm sort of the municipal auditor for PEO. So I have municipal clients across Nova Scotia, Newfoundland, and PEO. So thank you so much for having me. The real heart of the team is Adele Oki, who I believe was here in the fall and met with you all. Adele is a manager with our group and has been working on the audits for the last several years and has been working evenings and weekends with Wendy to make sure that we've had this audit ready for you. And then Angela Wu is our senior accountant. So Angela was also here in the fall working on the audit and does sort of all the hard work. I'd say Angela and Adele do all the hard work. I get to come here, have a lovely little trip, take all the credit. An important thing for us as auditors is that we confirm that we are independent of the organizations that we audit. So I do want to confirm that we have complied with all of the ethical requirements of being auditors, and we're not aware of any conflicting relationships with the town. So just before we dive into the statements, I kind of want to go through this presentation to talk a little bit about what did we actually do as part of the audit and what are the findings of the audit. Because the financial statements belong to the town and are your numbers, and we are using auditing techniques to make sure that the numbers are correct and not materially misstated when we bring them to you. So first off, we use what we call materiality. Materiality is set based on a benchmark of the organization. So for the town of Mahone Bay, we use 3% of budgeted revenues. So that comes in at $250,000. So what that means is that number is if we found total errors greater than $250,000, we could not, and we didn't adjust that, we couldn't say that the audit is a clean opinion. Spoiler alert, we are issuing a clean opinion. There are not total errors greater than $250,000. We also have a number called trivial materiality, which is $12,500. That number is any errors that we find that aren't corrected above that amount, we have to tell them to you. So for the audit opinion, it is a clean audit opinion, but it is what we call a qualified audit opinion. It's been this way for the last few years since the adoption of the new asset retirement obligation standard. As we've been planning to catch up with the financial statements, we have not just had time for the town to adopt the new standard. So that hasn't been completed yet. So because the new standard hasn't been adopted, we just say on our audit report that that is the case. And the municipal affairs is aware of that and is okay with that. And it's very common. Municipalities across the country have been qualifying their audit opinions over standard. And then those unadjusted errors. So total uncorrected errors in the statements are totaling $57,000. So well below that $250,000 threshold. When we look at these things, these are things that once the audits are cleaned up, we're going to be working with Wendy to kind of correct. What it is a lot of things like data, subledgers and reports in the accounting system not quite agreeing to the final balances in the financial statements. So there's a reporting discrepancy there. Like I said, it is small. It's $57,000. So it's not mission critical for the audit that it gets cleaned up, but it will be a project that once we're caught up, we'll be working on. So are there any questions at this time on the first few items there? Okay. So just sort of laying the stage there. So our audit risks. So as auditors, we have risks. We have to do procedures on any balance that is material. So anything above that $250,000 needs to be tested. But we have what we call a spectrum of risks. So risks can be low, moderate, elevated, or significant. The higher the risk rating, the more work that we have to do. So these 6 items here are our significant and elevated risks for the audit. So management override of control. This is a mandatory risk for all audits. Any organization that gets audited, we have this risk essentially saying there's a risk that management, as the overseers and purveyors of controls of an organization, could override them and not follow those controls. No issues with those. We look at the ability to post entries and approvals and things like that, and there were no findings around that risk. The other one is the recognition of taxation revenue, so making sure that your taxation revenue is in line with the capped assessments and the approved mill rates. No issues were found with those numbers. The existence of the inventory, so this is primarily in the utilities. So the utilities have quite a bit of inventory. We have somebody come and do the count every year at March 31st to make sure that the inventory levels are accurate to what's reported. No issues there. Tangible capital asset additions, once we get into the statements, there were about $3.5 million spent on capital assets in 2024, 2025. So we do a lot of work to make sure that those are all accurately reported, and no issues there. Recognition of government transfers. So as we'll see, there is a significant unearned government transfers, particularly around the swimming pool and Edgewater project. So making sure that that funding is only recorded when the monies are spent. So we did post an entry to make sure that that unearned was correct. So we ended up deferring about the delta is about $600,000 that was adjusted. So 1.35 million in grants received were deferred because they hadn't been spent yet. And about $750,000 related to the Edgewater project had been spent and those were recognized. And then the other risk is the consolidation process. So I would say this is probably our biggest risk in the file, making sure that all the funds consolidate correctly. All of the fund balances are matching and correct. Thanks to Wendy and Adele, they do. But it was a lot of work. So I'd say that is definitely our biggest risk in making sure that these consolidated financial statements are correct. And as part of the financial indicator report that the Municipal Affairs is looking for, they scrutinize the consolidation process very heavily. So that has been all taken care of as well.
Lauren,
Yes,
is it okay to just jump in?
absolutely.
Is that typical of other of this municipality? Is it unique to this municipality because of our utilities?
No, lots of municipalities that I work with have utilities. They also have the structure of general capital. So it's quite common to have this consolidation process and to have it be kind of lengthy. I would say, as we found this year, some of the automation and the accounting system for the town made it a little more complicated for the town, but note with the other municipalities I work with, it's quite normal to have this issue. Yeah. So I do work with other municipalities with utilities, and we do see this. So just a snapshot on the utility audits, because we'll go through those statements quickly at the end as well. So for the water utility, those statements were audited with a materiality of $90,000 or 2% of total assets. The key risks there were the existence and valuation of the utility plant and equipment, that inventory balance I mentioned, and then the accuracy of the interfund transfers and balances. There are no unadjusted errors related to the water utility, so that all went very smoothly. For the electric utility, the materiality is $158,000 or 5% of expenditures. And this is just because the expenses are very, very high in the electrical utility because of the volume of power being purchased. So the same risks for the electric utility as the water utility. There we had unadjusted errors of about $20,000. So that is wrapped up in that 57 I said earlier. And again, this is related to some cleanup. So there's customer deposits and accounts payable and some write-offs that need to happen. But nothing material interesting. I don't know if we do in camera or not. I have some questions to ask council that many municipalities prefer if I go in camera for, so I can wait till the end maybe.
Yeah, I think if we're going in camera, because it means turning off the
Yeah.
YouTube after all that.
I'll just
might as
skip
well
that.
save it for
I will
later.
just skip that slide and we'll revisit it.
Okay.
So after,
Um,
yes,
Just for people who may be watching, could you say what the questions are?
Sure. So that is not a problem. So these are all standard questions that we ask as part of every audit, but we typically will get the responses in camera, depending on the potential sensitivity of the nature. So we'll ask about if there are any contingent liabilities that the council is aware of that, other than those that are already disclosed. Are they aware of any fraudulent activity in the year? Are they aware of any non-compliance with laws and regulations? Or are there any what we call subsequent events that need to be disclosed? So subsequent event is anything that's happened between the year-end date of March 31st, 2025 and today that would have to be disclosed. We do have one disclosure on the statements. And so again, typically those could be potential other contingent liabilities. Thank you.
And just for the public record, these questions, of course, have been asked of staff, but they have an obligation to ask them of council members as well.
So after we present the financial statements this evening, before I can sign the auditor's report, there are a few outstanding items that I need. So the biggest thing, typically the other things are very procedural. So we need council's approval of the financial statements before I can approve the auditor's report. And then we have a signed management representation letter that is provided to Dylan every year that has a list of, we asked you these questions, these were these answers, you're signing this confirming that is what you told us. But the other big piece is for area. So area, 10% of their financial results are reported in the town of home-based financial statements. They have their own auditor who issues their financial statements. That component auditor is MNP. They have obligations to us to provide us sort of certain things like those in-camera questions, confirming that they ask specific things and they're not aware of any issues with area that we would need to know about. And they have not gotten back to us yet.
We did both them, the last Wednesday of May. Kelly, you and I were at that meeting of area.
Oh, yes, I'm sorry.
To confirm their 2026 statements, yes. And he did say that they were waiting to get back to them. So I have just followed up with a partner there to say, I'm meeting with council. I'd like to sign statements by Monday. So could you get me back these by Friday? So that is what I've said to him. So we'll wait. But just to let you know, we've been kind of waiting, why hasn't the auditor signed the report? I have to be at the mercy there a little bit. So internal control matters. So no significant deficiencies or deficiencies to report. There is a management letter, actually that I don't have that tonight, that's my apologies. So a management letter will be provided to Dylan and Wendy with some recommendations. So things like these cleanup items that we've mentioned, nothing, but there are no significant deficiencies or concerns that we have with internal controls of the town.
And maybe there's an opportunity to direct that management letter to the audit committee that does not yet exist when it does exist.
Absolutely. Yeah, no, I meant to have it with me tonight, but I don't think it was finalized today. So once that is ready and in Dylan and Wendy's hands, that can definitely be forwarded to the audit committee once established, and then that way they can sort of monitor that management is complying with those recommendations. Okay, so that is the presentation. So just to kind of set the stage a little bit before we get into the actual. So I'll pull up the consolidated financial statements here. I'm going to start with consolidated because I think that's easier. The utilities will go much faster because a lot of the comments in here are really informed by what's happening. I'm not going to give you my marked up copy. I should give you a copy. So just bear with me. Let's stop sharing first.
While you stop sharing, it probably doesn't matter, Brian, when we're in the screen share, but I think you might be off mute. Just keep highlighting your picture in a way to suggest you might be having an audio feed.
Well, it's got a line through it on
Okay,
here.
oh, then it's probably fine. No, I'm no longer the host, so I can't
Yeah.
check.
Oh, well, if,
Yeah, it's agreed.
yeah,
There we go.
Oh, yeah, there we go. Yeah, it doesn't matter when we're screen share because it'll stay on more on anyway, but when we're otherwise, like.
okay.
Yeah, the girls were saying that it's echoing, so that may have been.
Yeah. So I walked over there and then I realized that.
He's the host.
I can't do.
That's what Kelly said, and I said, I can't, she's the host.
Yeah. So Kelly would have known how to give her screen sharing without making her the host.
All right.
But it's good to know all the staff are following along.
Yes, they are.
That is
I'm getting
dedication.
messages.
I would not be following along. So well done to the staff. So first, here's our auditor's report. So addressed to the mayor and the members of the council. So again, just stating that we're issuing a qualified opinion and stating that the consolidated statements present fairly in all material respects the financial position of the town of Home Bay at March 31st, 2025 as consolidated results of operations in accordance with Canadian public sector accounting standards. So of course, as noted, that is with the exception of the standard asset retirement obligations, which we'll be working towards adopting once we're caught up here. So just to highlight, and the reason why those questions later that I have to ask of council is because you do have responsibilities to the financial statements. And so our audit report always highlights the responsibilities of management and those charged with governance, which are you folks tonight. So management is responsible for the preparation of the financial statements and for the internal controls. And then those charged with governance are responsible for overseeing management's financial reporting process. So that's why I say when we look at things like materiality and uncorrected errors and things, these are really financial statements of the town and the responsibility of the town. And what I own is the audit report and my opinion on those, even though we do assist with the preparation. So like I said, they have been thoroughly reviewed by Dylan and Wendy to make sure that because BDO prepared the statements that they're comfortable with all of the adjustments we have made and the presentation that it is accurate. So for some highlights, so starting with the balance sheet, so the snapshot of all of the assets and liabilities at March 31st, 2025. So cash was 7.7 million, down from 8.8 million the year before. When we get to the statement of cash flow, what you'll see is essentially this is the delta of cash actually brought in from your tax base and your grants, less the capital assets. So capital assets purchased were about 5.5, we're about $1.1 million difference from actually the cash that was brought in from grants and from taxes. So that is why it's down a little bit, but still quite at a good amount. Taxes and rates receivable. So these are up quite a bit, and this is because of an increase in the electrical utilities receivables. So when we look at the electrical utility later, the revenues grew quite a bit in the organization, and so the receivables have grown as well. With the liabilities, so temporary borrowings. So at the end of February, the council did approve a draw on the line of credit of $1.35 million. So that has been recognized there. Accounts payable have gone up by about 700,000, and this is just because of all the construction and capital projects, outstanding invoices at that time related to construction projects. Unearned government transfers. So like I said, this has gone up by about $500,000. And so the difference there is there was 1.35 million brought in new grants this year for capital. So about $1 million was for the Edgewater project, about 325,000 for comfort stations, and then some monies for the CMHC Housing Accelerator Fund. So those funds had not been spent at year end, so they've been deferred. And then coming out of it was about $750,000 of money spent on the Edgewater project. For the long-term debt, this has gone up by the new debenture for the solar garden. And then all of the repayments have happened in a timely manner. So that's why that number has gone up. When we look at the debt, I think really good to see that a lot of it is for infrastructure and serviceable assets. So there's the fire truck loan, the debenture for the solar garden. The town isn't carrying a lot of operating debt. It's mostly infrastructure debt. And so then the net debt position has gone up to $12 million. So with that increase in the debenture debt. For your capital assets, so as I was saying, significant capital asset purchases, and then there is amortization of about $1 million. So that is what the $2 million increase is there. So about it was about 3.5-ish million in additions, and then about a little over $1 million in amortization coming off in the assets that were purchased. So there were the improvements to the town hall. I knew about those not only from the audit, but because when I was coming here, Google Maps has the facade with Tyvek on it instead of the new siding. So there's a new fire pumper, a new utility task vehicle, a new backhoe, all of the Edgewater improvements to date. There's one street had a new culvert put in, and another street had new stormwater infrastructure put in. So a lot of activity happening around town.
Laura, did you just touch on the long-term debt in note 10 and the consolidation also bringing in the area debt and the area debt being such a material component, subcomponent of the 11 million?
Yeah, definitely. So I think that is important to note that about, let me see if I can do math really quickly here. Yeah, to about 3.6 million in area debt. So the way that the relationship with area works is that 10% of all of their assets and debts are reported in the consolidated financial statements. So these are related to the town's operations, but just as part of the town's ownership in area. So the way that the financial reporting standards work is that they say, if you have shared control of another organization, you proportionately consolidate their results onto your financial statements. Because the town of Mahone Bay sits on the board of areas, involved, has some shared control with the other municipalities, you take on your consolidated statements that sort of financial obligation. Now, the town has not is not, really responsible to pay these, but in the structure of control, that is how the financial reporting requirements work. So that is a great point, Councillor Feeney. If we reduce that 3.5 million, really the town's actual debt is about 8. Does that work? No, 7.5 million.
Right.
Yeah.
Right. And so, and I guess the next question, we talk about this a lot. I think this is one of the most salient points that will come out of the audit, really around that kind of illuminating that number, $11 million, and being able to explain to people on the street corner what's driving that. And as you mentioned, the area debt's 3.5 million, 3.6 million. As you already noted, a big piece of that is the solar garden, 2.4, and then we've got the fire hall for 4, and what's left over is to be frank, is a fairly inconsequential amount of debt for compared to the capital asset base.
Yeah.
So I mean it's a recurring theme about providing council being in a position to kind of speak to that clearly, so that we can provide some comfort that these other large investments that we're making also come with their own revenue streams. That I think that we forget about that sometimes.
Yeah.
Other people beyond the taxpayers in Mahone Bay are also contributing to supporting that load.
Yeah, no, I think that's a great point, is to say, a lot of the debt load here is, service generating assets. So the fire hall and the fire equipment, the solar garden, And then, yes, the actual area, the actual sort of, operating long-term debt, is very, very small of those sort of debentures. And then the, obviously just the short-term temporary borrowing line, again, just as a cash backstop for timing's sake, it is not, it's very good, to have sort of 29.5 million in assets compared, like in capital assets compared to 11 million in overall debt, because also the area assets, 10% of those are factored into that 29 million. So it is a very good ratio. It's a very strong debt servicing ratio. Right. So then, that is the balance sheet. So overall, net assets and accumulated surplus have grown by about $700,000. So that is the surplus for the year. So if we go to the next page, the statement of operations, this will show the revenues and expenses for the year. So for the revenue, taxes and rate revenue has increased by about $500,000. When I was looking at this, the mill rates remained relatively flat. There was a little bit of movement, but not significant at all. The biggest thing is that the capped assessment rate increased significantly. So that is what is driving that increase in taxes and rates. Electric sales are up by about 4%. You go down to the expenses, the first line there you'll see is power purchases. So the power purchases have gone up about 6.5%. So that is just something to obviously monitor, is that the power purchasing is going up faster than the rates, which is definitely not unique to the town, as power purchasing increases dramatically. When we look at the next line, conditional transfers, so that is that revenue that I mentioned has moved from the deferred revenue. So that is directly related to capital asset additions for the Edgeware project. So the way that it works is you are provided grant funding, and you must defer that until you actually spend it. So as work is done and invoices are paid, then that is recognized. So that those conditional transfers relate to grant funding that was restricted and has been spent. Metered water sales are flat. Other revenue from owned sources increased quite a bit. And this was related to, actually, I didn't write a note as to why revenue from owned sources.
All those rainbows we sold.
I just want to be able to say why, because it is a material number. And I don't know where the Zoom went, so I stopped sharing. Oh, I am. Yeah, no, I'm still sharing.
No, you're stuck now.
Oh, did I stop? Okay, perfect. I just see everybody there. Okay. I switch windows here very quickly. I can tell you why. Oh, yes. So, return on investments was very, very good. That was the biggest item. And then other than that, it was relatively flat. So, yes. Okay. So then overall, revenue increased by just under 800,000 for the year. Most of that, again, being really related to these conditional transfers, which had only been 15 the year before. For the expenses,
Before you go on, Lauren,
yes,
back up at taxes and rates.
Yes.
You said something that I thought I heard anyway, They made a comment about the cap assessment having increased.
Yes. So the assessment values for the homes in the town increased. Overall, we look at the entire assessment for the town, and what was provided increased by about $20 million in the overall.
The assessment.
Yeah.
Increased.
Assessment.
Oh,
rates.
okay.
So the assessment, so the mill rates didn't really increase, but the
Mhm,
actual
yeah.
property values overall increased by about $20 million on whole. And that is what's driving that increase.
The part that's confusing me is the capped part.
Oh, sorry, so the province actually will provide an overall assessment, and they actually cap it for residents.
Yeah.
So that they don't, so that the value is not a shocked increase. So they provide two numbers. They provide an overall assessment, and then they cap it every year. So the province lowers the overall assessments to what could actually be charged, sort of as a protection item.
Mhm. I'll ask Joe later.
It's just the overall cap, the overall taxable assessment increase,
Yeah.
net of the cap.
Okay, I'm thinking of the fact that I have a capped assessment and my neighbor doesn't. They're uncapped, so our tax rates are, and the actual what we're paying is very different. So,
I just think that the driver of the revenue is the total taxable, the total
Yes.
assessment that's allowed to be taxed.
Yes.
And that
Okay.
actually, that went up by, let's call it 5 or 6%,
okay,
which is similar.
Yeah, but they do always state that, were it not for the cap, then the assessment would have gone up
25%.
that much more, yeah, so that's the difference.
Yeah.
And I know this is a Nova Scotian phenomenon, I think, eh?
No, we have it too.
Well, it's in the BI too, okay, well, you don't have to explain how the PI one works for.
We'll be here for a while.
You know, I barely understand how it works, if I'm honest. I just get my bill and say, yeah, okay. Take it out of my account. So then,
Is that, pardon me, in the rates, is that where the deed transfer tax and we'd also pour into that line item?
it does,
It
yes.
does, okay. Thanks.
So on the expenses overall, really kept the overall increase in expenses to a really good level. So if we look at, I've sort of normalized out the solar garden expenses there, but if we just look at the overall expenses, about 4.5% increase. A lot of that, as we'll see on the last page of the segmented disclosures, relates to salaries. So I think there were a lot of new positions added to the town, along with annual rate increases that have led to that. So a lot of that increase in general government services is a lot of salaries, but overall a really great job of we're always looking at our municipalities, our governments, trying to stick to a zero balanced budget, and that has been achieved here. So when we look at overall, we say an annual surplus of about $718,000. We have to factor in the fact that about $800,000 of that was actually spent on capital items. So if we were to normalize that conditional transfer line out, we're sitting at about a deficit of $80,000. So that's really great. Really well done on zero-based budgeting and sort of trying to achieve that result there. So
And that's on the consolidated.
Yeah.
Yeah, so that, obviously the challenge is sticking that landing
Yeah.
without ability to control the regulated rates on the utility revenues. It makes it certainly a challenge to balance that overall, yeah.
but having done that, that's really great.
So you do a lot of audits of different municipal units, so you're telling us that 80,000 variance is pretty good. Well, that's good. We also budgeted for a deficit in the
Much
utilities.
higher. And we had a much higher deficit last year.
Yeah.
Because of utility concern.
Look at Wendy just smiling over.
So happy. I should sleep so good
I
tonight.
think I'm asleep.
That's the fact.
It might be the first night she's not putting in the overtime. Hopefully she will sleep well.
So the next page is just the statement of change in net debt. So it's just showing what's driving that net debt increase from 10.8 million to 12 million. And so as you can see, that's really the surplus less the changes in the tangible capital assets. So when we break out the purchases, the disposals, so things like the old fire truck that was replaced was disposed of and all of that, and then the amortization, it's about a $1.2 million difference. So that's what that changes there. And then the statement of cash flow. So like I said earlier, when talking about the cash overall dropping by about 1.2 million. As you can see, cash provided by operating activities. So that's your taxes, your collections on your other revenues, your grants and all of that. Cash actually increased by about 4.4 million, but then all of the purchases of the tangible capital assets come off of that. And so that's what's really driving that change. Financing activities below is sort of what did you bring in on new debt? What did you pay out on your existing debt? And that was really flat there. So while there was the new debenture, the temporary borrowings, you paid off previous temporary borrowings, you're paying off your long-term debt on its planned basis. And so really that was flat there. So really the driving force there is just the difference of all of the infrastructure investments happening. Just represented here on the cash line, it is broken down into two factors. So there is cash just held in the bank that is readily available, and then there is a term deposit. So I'll just note everybody down to note 3, which is on page 15 of your financials, or page 13 of your financial statements. Apologies. This is just stating that for the some of the bank debt that's currently held, the Bank of Montreal required this term deposit to be held as security to kind of guarantee the debt. So,
Sorry. You had to edit the note here to reference the Edgewater Street project, but I can go into detail on why.
yes.
So it just says in reference to the Edgewater Street project, which is for anybody watching, these are funds that were required to be put aside by the permitting authority to ensure that in the course of the project, the town would actually complete all of the project works in the shoreline component. So we're allowed to release the funds from that hold as the project work progresses. And essentially it's a requirement from the Department of Fisheries and Oceans that makes sure that we have the money to do the project that we are in fact doing.
Yeah, so DFO wants to make sure that that work actually happens. So this has been set aside. And as it says in paragraph 2, it's being held by Bank of Montreal, but it will be released as those funds. So as that,
At least we're earning a whopping 1.5%. So,
too bad it wasn't a little bit later when the interest rates were really good. But yes, so that has been set aside for that. So we've just broken it out and disclosed what exactly that is for, so that users understand that about $1 million in cash is set aside for that shoreline project. There is nothing else really exciting in the notes. I think I have described them all. Note 9 is the total area results, just breaking out exactly how much of area is in the financial statements of the town. So as we already discussed, there's about 3.5 million in debt and about 3.5 million in capital assets on the books. So when we look at that 29 million and that 11 million, reduce them both by 3.5 million, and that's what's owned by the town. And then area contributed about $44,000 to the annual surplus of the town.
Any questions?
Just for note 13 on page 22 does list the contingent liabilities of the town. So we have disclosed as required a few of the legal actions against the town related to the Expropriation Act, and some stormwater runoff damage. So these have been disclosed along with the amounts of the claims, but also stating that the town cannot reasonably estimate if these claims are actually expected to be paid out. And that is, we have confirmed that with the lawyer that if that action is at a position right now where they couldn't actually say if and how much the town may be obligated to pay out on these things.
What page did you say?
All right, page 22.
Oh, 22. Okay. Mm.
On page 25, we do have a subsequent event listed. So just that the town received approval from Department of Municipal Affairs for an additional project. And so a new line of credit was opened to fund the project expenses, and that was fully drawn down on as of March 31st, 2026. And then on the second class page, page 27, so this just gives the, this provides a different format for the statement of operations for the revenues and expenses. So provides a better breakdown of those segments of general government, protective services, etc. So as I said, you'll see down in the expense line that salaries, wages, and benefits have increased by about $300,000 due to new positions added and just regular COLA increases. Otherwise, electric purchases up the 6.5%, as I said. Administrative in general kept pretty reasonable on the growth there. Interest rates came down, so the interest paid was a little bit less than the previous year. Same with your water treatment expenses. We're down a little bit, and then depreciation is up just because with all of the new assets being added, the depreciation expense is being raised. So really there, the two big drivers in the increase in expenses are related to salaries and depreciation expense. So those are the consolidated financial statements. Are there any other questions?
No. Mayor, just for clarity, because this has come up from time to time, I think that when considering the town's treatment of government subsidies or grants, the flowing in is unearned government transfers, offset by the cash, obviously, and recorded as a liability, and you can see them on the financial statements. And then in course this year we had, or I guess in this fiscal year, we had an unusual high amount of unearned
Yeah,
government.
we've never had so
transfers.
much, and we'll probably
So-
never have so much again.
Right, so thank you to the MP and the MLA for that support, but, do you have any other commentary about that treatment, and is that, from your perspective, fairly standard methodology?
This is very standard methodology. The accounting standards are very clear that when you have funding like this that is restricted for large scale capital projects that have a lot of terms and conditions related to them, they are treated as deferred until what we call stipulation of the funding are met. And so typically that means you have spent the money, you have sent in reports to your funders to say we have spent this much for this period. They approve that those are eligible within the terms of the agreement, and then you're allowed to report it.
And so, like, on that point, like, the virtues of physically segregating those funds and making them unavailable are, from an accounting perspective, fairly inconsequential as they're posted on the books as a liability.
That's correct.
Okay.
Yes, it's not, again, it's sort of, I would say it almost sort of artificially inflates that net debt number because you are showing that they're restricted for a unique purpose, but it's very rare that that would ever sort of become a liability that would actually have to be repaid because the projects are ongoing. These are just projects that take a very long time to complete, to get started. So, yeah.
And Dylan, just to clarify, like the requirement by our lender to post really hard security of over $1 million in cash. I mean, I haven't seen that before. And it's probably due to the materiality of the huge amount of construction projects that we have at the same time right now. So, but from your vantage point, that's a fairly unusual.
Well, it's
requirement.
entirely to do with DFO. So basically, the Department of Fisheries and Oceans provided the specifications for the money to be, kept aside. And the Bank of Montreal are the ones who prescribed the term deposit as an instrument.
As an instrument.
I'm
Okay.
not personally sure that that instrument, strictly speaking, is the only instrument that would have satisfied the Department of Fisheries and Oceans, but it did satisfy them, and so that's what we ended up doing.
I guess when reading the note, you could be left with the impression that it was the bank that asked for the collateral. But in fact, it was DFO that was saying post the security.
Yeah, we did go back and forth on a version of the note, so belatedly, I did approve the wording involving DFO, but that's not what's in this version. And I'm not sure if that, Lauren, if you wanted to go with the wording with DFO in, but.
For the wording with DFO in, if now that we're discussing it, and so I'll make sure that that gets put in. Because I think it's important to note that this is really a requirement of the federal government because they want to make sure that the shoreline piece gets done before anything else. That is really important that is accomplished beyond the other aspects of the project, and so that's why they have restricted that in order to approve the project essentially. So I think that I prefer that other language, and so we can definitely correct that for the final version. So when we come to approve the statements, if they're approved, we can sort of approve subject to changes in that.
If everybody's okay with it, I think everybody understands the note and the expectation for some clarity around it. Yeah, that was just a matter of a quick back and forth by emails over the past week.
I have a slow grade when it
That
comes
is
to
okay.
finances, so Joe's question may have been what I want to ask, which is about not the grants that you have to wait until you spend them to get the money, but a kind of grant where you get the money up front and then where does it go? Because it's one of the questions that's asked frequently by the public. Where is the $1 million that came from community culture and heritage for the swimming pool?
Yeah. So that 1 million for the swimming pool is actually also included in that $7 million. So that makes up primarily, most of that money is Edgewater Free Project, but there is. Oh, I'm back on the
Note
page,
6.
note 6 or page 4 of the page. So that under government transfer line, it's mostly the Edgewater Street project, but there is the $1 million for the swimming pool in there. There is $325,000 for comfort stations. And there's about $100,000 from CMHC for the Housing Accelerator Fund. And then the remainder is the Edgewater. So that is really what is all comprised in that amount. To date, the swimming pool money none of that has been spent. And so that full $1 million is still sitting there. All right. Are there any other questions?
No. So are we ready to go into closed session?
Maybe just a few minutes on the electrical water utility.
Oh, I'm sorry.
That is okay. Let's do this.
I'm not trying to do a shortcut. I was
No, those will be very quick, I think, because really the activity in that we've already sort of discussed as part of that. So I'll start with the water utility. So on the water utility, there wasn't a lot of change this year. As you can see, the assets have remained incredibly flat, just about a $550 difference overall. A little bit of movement in what is sort of receivables versus what is due to the electrical operating fund, but with the assets that are the same. For the liabilities, these have gone up a little bit, predominantly due to on the water general side, due to some funding owed to the capital fund. So that has gone from 13,000 to 86,000, creating a little bit of an increase there. So the surplus in the water general fund has actually declined because of that. So from 94,000 to $12,000. If we look, we'll skip down to page 6. We'll skip the water. We have to do it this way. You do balance sheets, income statements. So let's go down to page 6 here for the actual operating fund. When we look at why that surplus has really gone down, it is because of the non-operating expenditure gone up a little bit, but also the operating expenses have gone up. So the biggest thing being the administrative expenses for the water utility have gone up. Water treatment has gone up a little bit. Transmission and distribution has gone up a little bit, but the biggest jump there has been a $50,000 increase in the administrative expenses. Still far below what was budgeted, but it has gone
Is
up.
that salaries? That would be administrative.
Yes, it's primarily salaries.
Yeah, and just for council's reminder, anybody watching, we did make a big decision at the strong urging of our regulatory process to increase to 3 staff within the utility. So that really was that was the year that.
Increase the number of staff.
Yeah,
It's not
essentially the
salary
vulnerability of the turnover and vacations and everything.
Overall, the metered sales and the fire protection sales remain relatively flat and in line with budget. So when we're looking at the water, really that only changes that additional staff number and the increases in salaries as a result. So overall, did post a deficit for the year of about $81,000. So we're grinding down that surplus to $12,000. If we want to go back up to page 5, this is the financial position of the capital fund itself. So there was a little bit of capital asset additions, about $300,000 in the year. This was primarily paid for out of the general fund, so that liability of due to general operating fund has gone up to pay for it. The long-term debt has been paid off appropriately. Also, a little bit of it came out of the capital reserve fund. And so there, your investment in capital assets has just gone down slightly, but has overall remained flat. So that is the water utility overall, pretty steady and within expectations. Are there any questions on the water utility? Excellent. So we'll switch to the electrical utility. We'll start on page 4. So with the operating fund of the electrical utility, as I said earlier when we were discussing the consolidated statements, the rates and other receivables have about doubled. This is because, as we'll see, the revenue has gone up quite a bit. So just a timing difference. When you have more revenues, you're going to have higher receivables typically, as people will pay out of the same rate. And so those behaviors will stay, but we're not seeing a large indicator of sort of collection issues or anything like that.
So you mean like the rates have gone up, but people have paid?
So people will typically what you'll see is when your revenue goes up, your accounts receivable will go up. That's because people's bills might go up, or you might have more people in the electrical utility, but their paying behaviors won't change. So they'll usually go up at
Energy poverty, would that figure in there?
that can figure into there. So what we do look at is are there a lot of receivables in there that are significantly overdue? People are not paying in a timely manner. we didn't see significant indicators that people are not paying or it's really prolonged payments. If that was the case, we would consider having like a bad debt against that or an allowance of us, an estimate saying this is what we don't think we're gonna collect, but we haven't really.
Because I noticed, when we did the changeover or encouraged changeover from oil to electric heat sources, a lot of people were shocked that their electrical, I don't know why they wouldn't think their electrical bill would go up, but I think some people thought they wouldn't have any energy costs, right? Or very low energy costs, but it just is another form of energy that is green.
It's still a cheaper energy than the oil.
Yeah.
I just shut off my oil tank this winter and got a second heat pump and same thing, but it's still a lot cheaper than the oil, so. So really that's why we're looking at it receivable as well. We get to the operations, you'll see the revenue going up. Liabilities have also gone up, so there is a large due to the general operating fund as well here, just with the movement of cash and where there are, there's a lot of cash to collect, which means operating cash is movement, and the electrical utility doesn't keep a lot of its own cash, so it draws from the town's operating fund. If we skip down to page 6, the real activity, I will say, so we can see here that the power sales have gone up by about $400. So in a mix of the domestic sales and power demand sales have both gone up. Commercial sales gone up slightly, but really it is in those domestic and power demand sales. And again, definitely the trend that we're seeing is increased energy sales as people switch to electrical and more green alternatives. As I said, your power purchased has obviously gone up commensurate to that, a little bit higher than the overall increase. Operating and maintenance has gone up a little bit, as to be expected when your utility is generating so much more power. But administration expenses have come down by about $70,000, and the salaries for the transmission and distribution have just gone up commensurate to your budget. Overall, the electrical utility did post a loss of about $54,000 for the year. So as I said, this can mostly be attributed to the fact that the power purchased is increasing at a higher rate than the energy sales are increasing, but still a much smaller deficit than the year before. And so a surplus overall of $239,000. If we then go to page 5, which is the statement for the capital fund, couple $100,000 in addition to the utility plant and equipment. And this was funded out of the general operating fund. And so total investment in capital assets has gone up by about $13,000. So those are the statements of the electrical utility. Any questions?
So Mayor, I mean, when you look at, if you look at these statements as the first of, say, 3 statements in a row, the financials that are the next up on Lauren's list of things to do, and then of course the budgeted view that we dealt with last month when we did the budget. Of course, we've seen in the budget exercise that the profitability and the financial stability of the electric utility continues to improve. It's improving because we're finally getting beyond the long regulatory lag that was thrust upon us by, again, SRB and its predecessors, where they made us delay our rate to action, even though our service providers they were flowing their higher rates through to it. So the good news, I guess, is this deficit is reversing. I'm not sure it's going to completely reverse in the 26 statements, but we know at the 2027 statements we're running a fairly material and healthy operating surplus. So I think if you look at those 3 statements as a companion, and get a bunch of graphs and trends, it should be a pretty attractive story over the next 24 months.
Yes, and even showing just now that, you know, the growth in the revenue and then obviously that surplus shortening and then, yes, that it will be good to see the 26 results and then again 27 to sort of see now with the rate changes, will that trend reverse completely? Grow that surplus back up again to be able to then reinvest into the utility.
Councilor Carver.
So, what's the timeline now in terms of next steps?
Yes, so for this evening, we will have, you vote to approve these financial statements. We will then get them filed with municipal affairs, and then pretty much start the 2026 audit in earnest. So the staff are scheduled to spend a significant amount of time in July to start the audit, with the plan to.
Thanks, Penny.
We're gonna give Wendy August, all of the fall, maybe. With then the intention to meet that September 30th filing deadline with municipal affairs.
Wow.
Even just the idea,
So
so.
would that be a party?
So that is our full intention, and the staff are all scheduled in to complete that work. So, and I think we've done a significant amount of work with these 2025 statements, but I think that should be a relatively smooth process.
For all of you who have swatted away on getting it done, just kudos and thank you.
For sure. Big news.
Yeah, it's unfortunate, we didn't have the pleasure of having our outgoing manager of finance join us tonight.
Yeah.
But she's set up a good team and they're doing good work and
Yeah.
she's officially finished this week and, you know, may or may not see any of you again in person, but I know that she really wanted to make sure we got these things caught up and pretty much have within her day.
I've been giving a lot of credit to Wendy because I've been on the phone with her a lot the last 2 weeks, but really a lot of credit is also deserved to Ashley because she has been with us throughout this process all the way through and has invested a lot of her time into it. And we're sad, obviously, to see her go and, you know, especially to Texas in July. But we also couldn't have done it. We couldn't have done it without Ashley, and we couldn't have done this without Wendy for sure. So it's been a huge team effort for sure.
Our whole team has been behind this.
Yeah. Well,
Yep.
good job. Good job. Okay, so now, any other questions here? No?
Any big questions from the gallery in a special meeting?
No.
Not in special meeting.
No.
Okay.
Sorry, we can't, they can email questions to us. So,
Mayor, hearing that, I'd move that we move into closed session for a few other follow-up questions.
okay,
Ms. Lauren?
okay, may I have a seconder for that motion? Second by Councilor Carver, all those in favor signify aye.
Aye.
Opposed, nay, the motion is carried. We will now move into closed session.
So do I stop the recording?
Yes.
Oh, yeah, you have, I think Lauren has host.
You try to stop everything you can on your end and then we'll make sure it's stopped.
I clicked the stop recording button next to the YouTube icon.